Thanks for joining me for a look at the upcoming 2023 housing market. First, we're going to take a look at the national picture of home prices and what's coming for 2023. I'm going to lean on a variety of national experts for the big picture, from Keeping Current Matters to Ken McElroy, the National Association of Realtors, Fannie Mae, Bigger Pockets, and more. After the national picture, we'll take a look at the more local market in the upstate of South Carolina, specifically Greenville and surrounding cities. Mortgage rates are floating around double what they were just a few months ago. As the housing market cools down in response to this dramatic rise in rates, home appreciation is cooling as well. And if you're following along with the headlines in the media, you're probably seeing a wide range of opinions calling from everything from falling housing prices to ongoing appreciation. But what's true? What's most likely to happen moving forward? While opinions differ, the most likely outcome is we'll fall somewhere in the middle of slight appreciation and slight depreciation. Here's a look at the latest projections so you have the best information possible today. Here's what the experts are saying about home prices next year. This graph shows the most up-to-date forecast from 5 experts in the housing industry. These are the experts that most recently have updated the projections based on current market trends. As the graph shows, the 3 blue bars represent those calling for ongoing home price appreciation, just at a more moderate rate than in recent years. The red bars on the graph are those calling for home price depreciation. While there isn't a clear consensus, if you take the average shown in green of all 5 of these forecasts, the most likely outcome is nationally, home price appreciation will be fairly flat next year. This is a change from just a couple months ago when experts were still calling for a growth in the 4 to 5% range. Basically, experts are divided on what's ahead for 2023. Home prices will likely depreciate slightly in some markets and gain ground in others. It all depends on conditions in your local market, like how overheated the market was in recent years, current inventory levels, buyer demand, and more. The good news is home prices are expected to return to more normal levels of appreciation rather quickly. The latest forecast from Wells Fargo shows that while they feel prices will fall in 2023, they think prices will recover and net positive in 2024. That forecast calls for 3.1% appreciation in 2024, much closer to the long-term national average of 4% appreciation. And the Home Price Expectation Survey from Pulseonomics, a poll of over 100 industry experts, also calls for ongoing appreciation of roughly 2.6 to 4% in the 2024 to 2026 time period. This goes to show, even if prices decline slightly next year, it's not expected to be a long-lasting trend. Looking at Bigger Pockets, an investor-focused website with more than 2 million members and a great site for anyone looking to become a real estate investor, they are predicting a slightly declining real estate market in 2023. Now, as of my last look, they aren't calling for big price drops, but they believe we'll start to see negative year-over-year pricing in about March or so of 2023. They don't think there's much of a downside risk since the declines will be moderate. Risk is mitigated compared to the last big drop because we don't have an overextension of lending like we saw in the 2008 big drops. American homeowners are in a much better place to afford their mortgages now and don't have the same issues holding their property. While values may lose 5 to 10% in the next year, they're in a good position to service their debt and have seen value increases of 40% in the last couple years. Before we switch to local trends, I'd like to invite you to contact me at any of the ways below, but the best being 864-607-3537 by text or call. If you're thinking of buying, selling, or investing in real estate, I would love to help. Now, all the numbers we've covered so far are looking at the national housing market. Let's take a look at the differences for Greenville. The upstate has been a protected market for years. Our big industry growth has led to a steady stream of new residents seeking to fill the labor shortage in the area. Greenville has been lacking enough homes and builders have been behind on demand for years. If you're thinking of moving to the Greenville area, you can expect home prices to stay fairly steady or grow a little in 2023. Homes are currently selling with an average of 19 days on the market as of last week. Properties are selling for an average of 98% of listing price, but we are seeing desirable homes that are well priced, still getting multiple offers and selling above listing price. Having an excellent realtor is key to maximizing your equity in this market. If you're buying, you can expect a little more wiggle room and a possibility of getting some closing costs. Buyers with FHA, VA, and USDA loans are having more success in the current market, and I believe that will continue through 2023. It is still important to have a great local lender to facilitate your loan and purchase. If you're looking to buy, now could be a great time, especially if you're looking for new construction. Many builders are seeing the slowdown and putting the brakes on what was a breakneck pace churning out new homes to try to catch up on undersupply. This slowdown hasn't hit their current inventory, and they want to make sure they aren't stuck with complete homes that aren't sold. This is a big factor in profitability for builders, since a built home ties up a lot of their funds while it isn't selling. This has led to many local builders giving big increases to the incentives they are offering buyers. 6 months ago, a buyer had almost no leverage and would have to take what the builder gave them or leave and look elsewhere. Now, many are offering more choices in your upcoming build and big discounts to already built homes. Some will also guarantee a lower interest rate if you're willing to use their lender for the purchase. I don't expect all of the offers to last as builders sell homes that have already been built and move on to just building to demand again. We are seeing a growth in people buying investment properties and big institutional buyers taking single-family residences for rentals. Last year, 80,000 homes were sold nationally to institutional buyers, with that number expected to be a lot bigger this year. Fox Chase, being built in Fountain Inn, is one of these communities with 87 homes being built on 32 acres that will never be offered for sale, but rented out from their completion date onward. However, some governmental bodies are starting to fight back against this. I can see both sides of the coin, but I do hope that owning a home will continue to be the American dream, since real estate is such a great growth of wealth for most homeowners over time. Either way, if buying continues from residents or institutional buyers, prices will continue to rise. If you're looking to buy, sell, or invest anywhere, I'd love to speak with you and see if I can help you. Thank you for watching, and please subscribe for continued content.